This is Asia Times News Video.
This is David Goldman, Asia Times Deputy Editor, speaking to you from New York City the evening of March 18th. Well, as we feared, we had a very bad hair day for tech stocks in New York, with the NASDAQ index down more than 3% and other indices down somewhat less. And the cause of this, of course, was a nasty sell-off in the Treasury market. And the worrying thing is that the sell-off began not in response to the Federal Reserve or economic data or any event in the United States, but rather it began at 3 a.m. New York time in Tokyo. That's like the old chaos theory adage about a butterfly that flaps its wings in Beijing and causes a hurricane in Honduras. Now, yesterday, we compared Federal Reserve Chairman Jerome Powell to the cat in the hat, standing on a bull while balancing a bewildering array of household objects. And the objects that the Fed chair is balancing, of course, are $4.2 trillion worth of Treasury bonds, which the United States has to sell to finance its massive deficit at 20% of GDP. Foreigners stopped buying U.S. Treasury bonds in March, and now it appears that out of Asia, we're starting to get people selling some of the bonds they already own, and that's a very bad sign. Nothing in particular happened in Japan, except that the Bank of Japan changed the band in which it allows the 10-year Japanese government bond to fluctuate by a very small amount, from 10 basis points to 25 basis points. That's a nearly insignificant move. It was done to help Japanese banks make money by buying and selling Japanese government bonds, but it looked like the beginning of a central bank tightening, and that was enough to send Treasury investors scurrying. So if you look at the chart, we see that the benchmark 5-year inflation index Treasury yield shot up about 20 basis points, and as it did so, the NASDAQ index plunged in lockstep. I concluded yesterday's broadcast with the words, "Be afraid, be very afraid." The Biden administration's $1.9 trillion stimulus not only requires a gigantic amount of financing, bringing the deficit above $4.2 trillion, as I mentioned, it also requires an enormous amount of demand to be shot through the economy on a sugar high, and this is leading to bottlenecks in a very rickety supply chain and a jump in input prices to U.S. producers. We saw that in the Philadelphia Federal Reserve Index of economic activity, which had the highest reading since the early 1970s, most of it driven by input prices and labor costs. So we're headed for a very difficult period. The Federal Reserve is trying to hold the line, but it may not be able to. So caution is the watchword in this market. This is David Goldman speaking to you from New York City on March 18th.
This is Asia Times News Video.